Hello, and welcome back to our YouTube channel. I'm Jess, consulting accountant here at Riverview Portfolio and Property Tax Advice. Today, I'd like to talk to you about something that comes up a lot when people are selling a property they've lived in: Principal Private Residence Relief, or PPR relief for short. Now, this is one of those reliefs that sounds really complicated, but once you break it down, it's actually pretty straightforward. So, what is this relief? PPR relief is a UK tax relief that can reduce or completely remove capital gains tax when you sell a property that has been your main home. In plain English, if you've genuinely lived in a property as your home, there's a good chance you won't have to pay capital gains tax when you come to sell it. But the details matter, and that's what we're going to go through today. So, how is this relief calculated? If your property has always been your home for the entire time you've owned it, then it's really simple. You don't need to do any calculation. The whole gain is covered by PPR relief and there's no capital gains tax to pay. But if the property wasn't always your home, maybe you rented it out for a while or you owned it for a little while before you moved in, then the relief is worked out on a time apportionment basis. HMRC looks at how long the property was your home compared to how long you've owned the property for. And that same percentage of your gain is tax-free. And there's a little bonus here. You also get the final 9 months of property ownership automatically exempt. Even if you weren't living there at the time, it's treated as if you were. But what if you've got more than one home? You can only ever have one main home for PPR purposes at any given time. If you do own two properties, let's say you split your time between them, you can actually make an election to HMRC telling them which property you would like to treat as your main home. And this is really important. You only have 2 years from the point you own both properties to make that election. Choosing wisely can make a real difference to your tax bill. And a quick note for married couples and civil partners: you can only count one property between you as your main home at any point in time. You can't each claim a different property was your main home. But how do you prove your main home was your main home? PPR relief is evidence-based. Just saying, yeah, this was my main home, isn't enough for HMRC if they were to ask questions. You need to be able to show proof. Things like utility bills, council tax, being on the electoral roll, insurance, even things like personalised mail. You need to keep records. So what if you were to move away for a period? And there's some good news here. You don't have to actually live in your property for 100% of the time for it to keep your PPR relief. You can be absent for up to 3 years and still keep the relief. That might be because you're working abroad or you've gone travelling, and you can even rent it out during this period. But there is a catch. For those 3 years to count, you normally need to move back in afterwards and genuinely treat the property as your home again. There's also some extra rules if your job requires you to live elsewhere. For example, if you were sent abroad with no choice, or you were required to live in a different location in the UK, you have up to 4 years. In those cases, you can still get relief, even if you don't move back in, as long as the property was genuinely your home at some point. So yes, there is a little bit of flexibility here, but you need to tick the right boxes. There is also another restriction that you need to be aware of. If you use part of your home exclusively for business purposes, PPR relief is restricted on that part. For example, if you have a garden office that's only used for your business and you claim expenses for it through your business, the gain on that part of your property won't be covered by the PPR relief. So let's recap on these key points. If it's always been your main home, there's usually no capital gains tax. If it's not always been your home, then principal private residence relief is calculated based on time lived versus total ownership, plus the final 9 months. You can make an election if you've got 2 homes. Married couples and civil partners can only count one property as their main home. You'll need evidence that the property really was your main home. The 3-year absence rule gives you some breathing space, and you can even rent out your property during this time. And relief is restricted if part of the home is exclusively for business purposes. And one final point before we wrap up. When you sell a residential property, any capital gains tax has to be reported to HMRC within 60 days of completion. Now, it can be tempting to do this yourself to try and save on fees, but with rules like these, what you don't know can end up costing you more in the long run. Sometimes it really is better not to be penny wise and pound foolish. So, if you're thinking of selling a property that has been your main home, or one that hasn't always been your home, make sure you understand how PPR relief applies to you and get advice if you're unsure. Thanks for watching. If you found this video useful, give it a like, hit subscribe and turn on notifications for more tax insights.